Yo. Okay, I'm back. All right, so I figured it out. My audio, my mic was on stereo. So what happens is like you will only be able to hear on the right ear if you don't have the proper device. So now that I switched it to mono, you can hear both ears. You should be fine. Chris, if you're here, man, you should be able to hear me now. Okay, cool. All right, let's do some charting. I'm going to turn up the volume a little bit. What up, Bruce? Is that too loud? What's up, dude? What up, Rose? What up, Pip? What up, Andrew? No, you a legend, bro. What do you mean? All right. Let's see AMC's current setup. All right. Where are we? Where? Okay. Thanks, Silicon Alley. Appreciate that. What up, Sean? Any reason I favor the lines? I'm a very visual person. I think the lines represent just a better uh, it's basically the moving average of what's happening. Candles are sometimes harder to read, in my opinion, especially when trying to figure out if these patterns fit with each other. It's really easy. You know, when you get the bars pattern, you're able to match it up a little bit better than if it was a candles pattern. What's my background? Dude, it's just a gray background, man. I can change the color though if it's kind of tripping some people out. We can do like green or something. Blue. How's that? You guys like blue? Or dark blue? Maybe dark blue. Okay. We're gonna go on the 1 hour. There we go. Beautiful. Okay, so I keep getting a lot of these questions on when's the next run up, and I mean that's fine. That's fine. I'm gonna be honest with you guys. I really want this week to play out first before I have a good idea of when we're gonna come back up. But I'm gonna give you an example, okay? Because I feel like that'll maybe hype some people up. If we go back to Lucid, Lucid is a prime example of how this thing could play out. You guys need to pay attention to this because this is kind of freaky. But yeah, you got your. I think Lucid is one of those companies that is also was also, I guess, taken as with an opportunity to be shorted. And then obviously they got greedy as well, and they'd had that giant run up when the report came out on the car sales and how they were tracking. So if we go ahead and just compare these and sort of set it up to be what it is, right? So you have your short attack right here, and I would say here is where you got that, what the Wyckofians call the spring, if you will, right? You got your little spring right here, and I don't know, let's assume that the structure is somehow similar in that sense, and that we're currently sitting right here, right? Well, we know that with AMC, once the momentum picks up, the moves are a lot more drastic than, say, right, a stock like Lucid. So if this was the case, then I would say, looking at this chart, just looking at this chart, well, if we set up soon and create some sort of support, bounce off of 33, come up, bounce off of 33, and create some support around these levels, well, if you guys watched my video yesterday, I mentioned how we have to make a projector, right? This is the projector for Lucid. This projector comes up, comes down, and then it comes up again. So this is where the price action started. You have a projector on the macro level, and then you have a projector on the micro level as well. So this is a prime example of something that can happen with AMC. So if this was the case, if it was following a similar structure to how you look at things from a Wyckoff perspective, then I would say this is what we would be looking at, and we would probably come back up around, ends of February, March time. And this is not me making a prediction or anything, and not financial advice, but I'm telling you what is likely to happen if we were looking at it from a Wyckoff perspective or from on a macro level. And there's a lot of flaws to these things, guys. There's a lot of flaws to looking at things from this perspective, just because a lot of the times they don't. The price is not. There's no good way to predict the price in that sense. As you can see right now, if I would have followed this structure back here, I would have lost a lot of money, because, well, if I put it down here, I would have gone in right here, and then it wouldn't have gone up. So it's just one of those things. I mean, you can lay a Wyckoff schematic up here, do the same thing, and try and predict these run-ups. But if they don't happen, well, you're losing money. So there's just no point to do that. That's why I'm waiting for this cycle to play out. I think that's the most, for me at least, the most valid thing and that actually works right now has been this cycle. I haven't found anything else that's been working. So I'm going to stick with this until it fails me. What's up, man? What up, Mr. Simon? What's up, bro? Silicon Alley, when are we getting frisky? What do you mean, bro? We're going to get spicy soon, okay? We're in this red zone. Things are going to get spicy. Maquinita, what's up? Blue works well, actually. Yeah, it does. I love blue. See, this is a nice dark blue color. Yeah. How many days until the cycle ends? This cycle will end on January 18th, and it will continue unless something happens. So all of these just get shifted over. These are all aligned perfectly, by the way. I'm not just hovering these above. I align these. I'm very, very OCD with this stuff. 1501, 3. What the hell? Okay, I didn't mean to do that. Let's line this bad boy up. I'll put the green section there for now. But in no way is this predicting that we are going to come up. This is just, remember, the cycle follows these specific patterns, either inverse or identical. I know some people probably want confirmation in that, but I'll show you. So it's all going to be in my videos, but if you don't feel like going through each one of them, I'll kind of show you what's going on. So let's get rid of the lucid here because it's not relevant anymore. So these patterns that you see here, obviously we have the blue patterns, right? These are going to be our blue patterns. We also have the green pattern. We have what is a pink pattern as well. I'm going to be talking about this pink pattern because just specifically in one video, because it ties in with the green pattern as well. But I want to make a video on this because it's very important. Okay, let's see. And then we have a red pattern as well. These red patterns, so this is something that that I talked about on, I think it was a week ago, but there can be error found within these patterns that are cycling around. One prime example is right here. This wasn't supposed to happen. This is an error found within the cycle, okay? And that can happen. That can happen a lot of the times. But when you get unexpected movements from, let's say, CEO and anybody buying these heavy amounts of shares, this right here, September 30th, that was when they exercised a bunch of their shares. Adam Aaron and AMC exercised these shares. So the shorts, or as they like to call it, the composite women, on a Wyckoff perspective, these larger institutions did not really expect this to happen, and this wasn't supposed to happen with the cycle. So it's a mistake. This is an error found within the cycle, and these happen. They normally happen throughout. They normally happen, but it won't change the structure of the, it won't change the length or the cycle. It'll just change the structure. Remember yesterday I was talking about these sessions that are constantly being changed with how they're improvising off of each other. So a reasonable target on my next run. So one thing that I mentioned as well, guys, and this is it's almost like reverse psychology. You have to think about it that way. How many people are pushing the narrative that, and I did this in the past too. I'm gonna take blame for that. And I think you start to understand these things as they come by. But one thing that I talk about a lot is like that they'll make us think that the technicals are ready, right? And then things don't go as planned. Remember this big flag that we broke out of? They made us think the technicals were ready right here. But when when things don't go as planned, we like for example, we assume that because when the next run up happens, that we're going to hit these specific Fibonacci levels, right? So if I take my Fibonacci retracement right now, I haven't use this guy in a minute. Yeah, so if we come back here where we ran up to 77, right? You can line these up however you want, okay? But we're going to be looking at blue and we're going to be looking at pink, because these are the important retracement levels that we're going to be looking at when it comes to the run-up. It happened both on the November run-up, and that's how they got this price target level, 77. Now, if the same thing were to happen on this next run-up, and we were to extend this how history wants us to extend this, we would get a price target of probably about the 290 area, and that would be a technical psychological level that they would want to drop us down at. And a lot of people are saying this. They're saying that we're going to run up here and then they're going to drop us. And that's very likely. But what's also very likely is that they want us to think that. So once they push the narrative out there and a bunch of people start talking about this, these hedge funds can also jump in on the bandwagon and say, yeah, well, we're going to make them think that we are going here, right? Then a lot of people might sell, but what if we don't come here? What if we go all the way to 1,000, or we go above that, right? Or what if we don't hit 290? What if we hit 176 and then drop? So that's something that everybody kind of has to take into consideration, because these scenarios are very likely to happen. We don't know what happens behind the curtains with these hedge funds. They have everything planned. It's all reverse psychology. That's what the stock market is. It's just reverse psychology. You get these whenever the media pushes these like news or anything out, they'll tell you the truth in a way, but they'll tell you at the wrong time. So it's BS, because you'll get I don't know, oh, people are jumping in on AMC options, and they'll tell you right here, and then everybody's like, oh, I'm gonna buy options, and then they short it down 3 weeks later, and they know it's gonna happen, and then it'll come back up, come back down, and they're shaking you off of these they're misleading you in a way. Because that's what they want to do. They want to trick you. They want to make you second guess yourself over and over and over again until you give up. It's the ultimate goal. All right, let's see. Hello, Jonathan. Hello. Zhao? Is that how you say it? AMC? Is the algo programmed to run up? It's only programmed to run up if it can't take the volume. Go watch my video. Yesterday I talk about this, how this projector will do a check run. What I believe is if there's enough volume coming in and it knows it can't take it anymore, the technicals are lined up and ready to go, it'll shoot up. And that's when the algorithm knows that it has to create these options, these way out of the money options, so that they can hedge their positions later. When ATH. What do you mean? She said everything's good. What do you mean by that? Amen, brother. Is there anything we can rely on? So the only thing we can rely on right now are honestly the technicals. We have to wait for the right time. We have to be patient and wait for the right time. We have to wait for AMC to complete the next pattern, the next leg up. And a good way to do that, the tools that we have are, well, you can use whatever you want, but I'm currently using this setup that I have here because it's what works for me. have us projected to keep trading sideways until mid-May, mid-Jan. So it's the start of the year. Obviously, the from historical statistics, we know that the beginning of the year is always very bullish. But what you need to understand is that always in the beginning, there's a slight delay in how things happen. So I said on my video yesterday that we were going to come down on Monday because that's typically what happens. Every Monday, statistically, you will have some sort of drop, especially in the beginning of the year. And then it can trade like that for a whole week or maybe the first couple of days before starting to move up. Now, this applies to just stocks in general, but this is why it's important that we finish this cycle right here, because this is going to tell a lot. If we start playing this cycle out inverse, then things are going to get juicy, okay? Because, like, I'm not saying it's going to play out like that at all. I'm just saying if this starts tracking inverse, then I know that this time it tracked inverse, this time it tracked inverse. And here, if it doesn't track inverse, if it starts to track just in its regular form, then I have to go back and start just checking everything off because remember, this specific pattern is important to how shorts are shorting and covering these positions, right? Because every 2 months you will see this price action either happen identical or inverse. And what's happening is once they short these shares, they have to cover them. And when they cover them, you'll see the flipped version of that pattern, right? So, for example, right here, right, if we mirror this, bring it over here, this is where the covering is happening. This is the pattern that's happening because they're covering these shares that they shorted. It's the same thing on these smaller but more put in place patterns, if that makes sense, that are happening. So that's why I think this next pattern right here is extremely important. I'm just trying to understand your red bar pattern. I know it looks a little bit confusing. I promise this is like, well, I promise to with my theories here, but I just it's just something. It's a visual thing. You kind of have to work with it. I know it seems a little bit complicated, but you kind of have to just work with it and do it yourself. But the only like thing you really need in this is, well, going back to this blue pattern, which is the most important one because it's the most accurate. If you come back here, all of these movements are congruent to each other. So they either play out identical or they play out inverse. And you can see that here. They all line up together. Let me pull up these trend lines because okay. Yeah, so they all line up. This one right here is just like, this is the one that kind of just scares me a little bit because like this pattern right here is the same freaking pattern, bro. Look at this. Wait, hold up. There. Bam. Same pattern, inverse right here. And this pattern repeats itself every 2 months. Every 2 months on the 3 a.m. mark. Because I look at the New York Stock Exchange. So for me, I'm able to look at it at the 3 a.m. mark. For sure. So, and Ted, man, that's my theory of it. Okay, remember, I'm not doing financial advice here. I'm not telling you guys that this is what's happening, but I'm telling you that by the looks of it, this specific pattern here, I'm going to take away everything else here because it's like in the way. So yesterday on the video, I posted every single run up. Okay, so we had the January run up, and we had the November run up, which is very, very important to the cycle. I think this is when it all started. So these two are extremely important. Why? Why I believe there's a check run, and they're able to prolong the cycle after that if it doesn't check through. Okay? All of these patterns, all of these run-ups have what I call a projector. Okay? This pattern right here, these patterns right here, these are reflections of what the projector is. And once the projector signals that there's too much volume coming in, it has to set up for that. And once it sets up, it will create, remember, it'll create these options to hedge their positions in the future. So it'll trick people into buying these options. And I talked about this on the June run-up, right? They knew that they were screwed right here. And they were able to have enough margin to short it down a little bit more to set up for this. And they set up for this specifically, and this is what I call the shifting in the cycle. When you shift around the cycle, you're able to shift it in a way that aligns with these option expiration dates. The main option expiration date was June 18th. That's when the big quadruple witching dates have the most liquidity. So that's when they had the 145s and the 70s, and a lot of people bought these right here on this run up, and they bought it at extremely high prices. So when you do that, you're giving money to these large institutions, these big hedge funds. The little hedge funds, yeah, they were screwed. They were gone right here. But that doesn't matter. The smaller hedge funds, they're just helping us, honestly, at this point, because they're the ones that are they go down, they have to cover these shares, and then the big hedge funds have to baby them, They have to. So that's my whole thing. These all have a projector. Projector, projector, projector. And this is what tells it, yes, you suck, you don't have enough margin, boom. Not enough margin, boom. Not enough margin, boom. Okay? Now, going back to my point over here, this specific pattern, this projector pattern, is found throughout the cycle. You can find it right here. And some can say that there was maybe a possibility that it would have been here. But in my opinion, this whole fractal here seems like they're covering these shares back here. And this is where I talk about this flag theory that I had, where they would short the price down to meet these, short the price down to meet to be able to hedge their positions and bring the delta down to a net zero, because the price would always stay around 40, and that was a comfortable place to bring it down to. So this, in my opinion, was that pattern, and we just didn't have enough volume coming in. So they took this as an opportunity to be able to short it more. And yeah, they were able to bring it down all the way over here, and at this point, prolong everything a lot more, because obviously the technicals here are just not ready. We're not just going to shoot up into a straight line up. That's just not going to happen. No stock does that. We have to set up for the projector. The projector has to happen. We're not really playing. They release our buy orders when it suits them. They control every candle. I believe that the large institutions control or manipulate manipulate the movement, manipulate a lot of the movement. But I do believe that volume has to do with us squeezing or not. I don't believe that no volume has to, like, if we don't have any volume, there's just no way that we would go up. The cycle is not just going to say, like think about it this way. Whoever is telling you that we don't need any volume and that we just have to wait, that just makes no sense, because what's the ultimate goal of these hedge funds? The ultimate goal of the hedge funds is to bring this down, to short it down to a penny. They want people to forget about the naked shorting that's happening. If that was people's case, that we just don't buy anymore and just wait for this to squeeze, then that's like a joke to me. It's like these hedge funds just want to play a game with us, and they really just want to make your life. They want to make your life hard, and they want to mess with you, because like that just makes no sense. They're trying to bring this down to a penny. That's the goal. They're trying to bring this down as much as possible and have everybody sell, and then blame it on something else. Blame it on a market crash or something. Volume is important. We need volume to keep everything where it needs to be, and then that'll be the downfall of the small hedge funds, and it'll lead to what would be this squeeze. But volume has to be there. And volume, guys, volume comes in with literally, like, volume could be anything. It could be hedge funds covering. It could be retail coming in, like FOMO. That's extremely important. But when the technical's set up and they're ready to go, we just need some hedge funds to cover. They have to, the larger hedge funds are going to cover these shares. These right here. This price action right here that the hedge funds are covering, this is very important, because once they start covering these giant shares and retail comes in, and then small hedge funds start to get beat up, that's when it's important. That's when we go in. Yes, volume goes through dark pools, and that's where it's stored. That's where they do this, right? We come back here to this projector. This is where it's stored. They get all this volume, they store it up for a little bit, and then they prepare for what is going to be this run up. That is just what I think. That is my theory. I'm only using TA to understand the AMC GME play. I specifically, like, my channel right now is it's almost like a as they call it, a conceptual album in what is like AMC. I'm focusing on AMC right now. I don't want to focus on anything else. I've been watching AMC since January. I haven't posted on YouTube or anything, but I've been watching it since January. And dude, I would spend days, man, on the minute candle just watching it do whatever it was doing. So I'm very familiar with the movements and what's happening. And I was able to come up with this cycle with just not only finding out where these patterns are placed and how they're placed, but with a lot of math. There was a lot of math involved. Let's see. Mac and Bees. Love that name. Yeah, dude, no problem, man. I love making analogy videos. I really like being able to, just simplify things for people and everybody, because I know how hard it could be sometimes. We're given this very simple 2D graph, 2D chart to just look at stocks, and sometimes you need that, another perspective to kind of get the brain going, What's my prediction on this week? So yeah, I've talked about this on the last video. I did mention that there's a possibility that we do get this inverse head and shoulders, but the thing is, now that Monday played out, I think that that's probably not going to happen anymore, just because the right shoulder is too long. So this would have been the case. We would have gotten something like this. And this wasn't my play or anything. That was just a bullish case if the specific cycle would have played in that. But what I really pushed was this wedge that is more likely to happen in the short term. So this is what I'm looking for right now. Yeah, I mean, dude, like, this is the thing. There was so much hype with AMC a year ago. There was so much hype. Obviously, like, you get a bunch of new retail coming in, and uh, it creates a lot of FOMO, a lot of buyers, and a lot of crypto buyers too. Which right now, that's where, you know, with these meme stocks and stuff, that's where the volume was important. But when something like this happens, obviously the hype starts to die down a little bit. But once it comes back, once we establish these support levels and we establish these patterns, retail is going to come back. Um, that meme retail is going to come back and is going to help us and everybody make this thing happen. So when the technicals are ready, guys, like it's just a matter of time. Wood 69. I love that, bro. Yeah, hype that like button. That'd be dope. Yeah, give it a like, guys. No, I'm very like I don't like to hype or put any like um I want my videos to be as like transparent as possible. I don't want to clickbait or anything like that. That's not the goal of the channel. I'm just trying to inform you guys, you know, with a little bit of fun. Let's see. The option chain that lines up for January 18th is pretty huge. Yeah, so that's the thing. We're, in my opinion, we're too close to what is this January 21st option expiration date. In my opinion, I don't think we're gonna squeeze or go up before then. Just because it's way too close, and I just don't even see a projector pattern being played out right now. And the projector pattern, remember, has to come up and then come down, establish support, and then come back up. So I have obviously the dates here set up, and this specific 2-month chart, yes, it is very close to what is this option expiration date here on the 21st. But it would have to, I mean, we are close. If that projector pattern were to happen, it would have to happen like right now, like this, set up like this, and then we would have to start to go up. Now, the problem here is, remember, hedge funds plan ahead of time. They would lose a lot of money on those January 21 calls, and that would just be that would be game over. There's no, they don't have any out of the money, like they only have the 145s right now, so they would have to add more. People would have to buy those. So remember, this all takes time. And this, for me, this is just too close. It's too close. We need a little bit more time for that. Now, the next big date would be in March, right? Because we're thinking these quadruple witching dates, which means there is a possibility that if, depending on the coming week, there is a possibility that once we start establishing these support levels, that they're going to play some sort of games for March. In my opinion, I've been looking at March as a good place, or at least from like a hedge fund's perspective, like me trying to like look at it from their perspective. I think March would be the most ideal time to start creating these like out of the money options and having more retail come in on those, because that's how they do it, guys. It's kind of it's messed up, it's stupid, but that's how they do it. And I just think that once this pattern plays out, we can possibly see some sort of upward momentum towards that March expiration date before, though, because remember what happened here in June. We came up on June 3rd, and those options expired the 18th. So that was that was almost 3 weeks right there. 2 weeks and a couple days. So if you think about it, if we go to March, what would be, let's see, that would be March, I believe March 18th or the 25th would be that quadruple witching day. So let's just say it's the 18th. I'm not entirely sure if that's it, but if it was, I went on the 20-minute. Okay. If it was, then they would probably get us up, March, maybe March 2nd would be that time. Now, I don't know what the chart's going to look like, but that would just be ideal from a hedge fund perspective to hype everything up, have people buy more options, and then short it, bring it up to that psychological level and short it. Now, this would only happen if retail doesn't, if there is not enough volume or momentum when after this thing runs up and people don't hold or whatever, that's when it becomes a problem, because that's what causes this pressure, right? The algorithm knows this up here as well. It does this check, and then when it comes up here, it already knows what you're going to do, because they have basically have computers that study like trader behavior, which in my opinion should be illegal. But they know every click that you have. Like all these companies, they have that information. So that's extremely messed up. But yeah, I don't know. Let's see. I appreciate you, man. So is the blue line happening next? What do you mean by that, man? Yeah. But yeah, I mean, yeah, it's just, guys, it's really really early on in the year. I mean, this is our first trading day in the year, so it's always going to be, it won't be as like volatile most most days. You can see like the early in the month, typically what you get is this, sideways trading until a big move happens, especially in the beginning of the year. If we come back here, I mean, this was January here of last year. There's not a lot of price action happening for a little while. This kind of comes down. We do sideways trading for a little bit. And yeah, mid-month has always been the time where there's more volatility. And that's where the blue pattern lies. This pattern right here, it's always in the middle of the month. And that's where you start to see these like big movements. So here's one, here's a couple, downward, up, sideways, right here as well, up, down, up. Like middle of the month is when this crazy stuff happens. Right here, upward movement, blue pattern. So I think if we were to start to see any crazy price action, it would be around the middle. So yeah, maybe moving to the upside, I would say if this pattern doesn't play out inverse, because if it plays out inverse, then that's great. Playing it out inverse here. So this would be this pattern basically playing out inverse, because remember this is just a reflection of what is this down here. I'm sorry, this. Okay, hold up. Let's do this right. Very, 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 very OCD. There we go. Ah, okay, cool. And 3. Okay, so yeah, this is what this pattern, remember guys, is a reflection. And this is why I'm going to talk about this on my next video. But this pattern right here is a reflection of this pattern down here. Okay? Now, if this pattern were to play out inverse, then obviously we would start to see upward momentum and stuff like that. And it could always play out inverse and identical. We've seen that happen back here with this blue pattern, right? Some of them were tracing inverse and then identical, and then back here we're trading this specific pattern has not failed to track exactly to a T, literally, on the identical side. So this is tracking identical right now. I have a reason to believe that if we don't keep going down, if we don't complete this wedge pattern, then we're going to start tracing this inverse, which would change my thesis in the end. And then I would have to really look at this like, okay, we're probably going to start going up now and creating some sort of projector pattern maybe in the near future. And then I would start to think, okay, well, when are we going to go up then? I think that going back to this whole reverse psychology, guys, I think remember, hedge funds have to think of things from a psychology perspective. The whole thing is like with this channel, like the name of this channel, Trading with Emotions, is literally reverse psychology. I don't push the narrative to trade with your emotions. Obviously, it's the opposite. We don't want to trade with our emotions, but that's the whole thing. It's supposed to be ironic. But what they do is these hedge funds will basically set up these ideas that a lot of people are gullible to believe sometimes. Like, they might push the idea that we're going to squeeze, on like we did last year on January 27th, right? Because it just lines up. It lines up historically. It lines up. So that means it's going to happen. And a lot of people are going to believe that we're going to do that. But then they will create maybe this pattern right here. And this is the thing. We might play this pattern out that is going to signal a trigger, maybe like a squeeze trigger or something. And a lot of people are going to go in on this, and then the pattern's going to come back down. Because us squeezing or having another leg up on January 27th is just too predictable. Way too predictable, in my opinion. And I don't mean that seriously. Like, it's too predictable in the sense that if you like hedge funds want you to believe that we're going to squeeze on that specific date, and then they'll end up shorting it. Do I think whatever we do is because they already planned it? I think that whatever. Remember, I think the cycle is put in place, but it does constantly shift around the sessions that are happening. So I think they do have a plan in advance to create what is this giant cycle, but it's with what the algorithm is getting fed in. So all of this volume coming in, it's learning. The algorithm is changing, but it's learning, keeping the same cycle, because remember, the cycle has to align with options. And once this happens, they're able to do these checkpoints that either tell the algorithm that you're fine or you're not fine, and that's where the price action starts to shift. Um, Out of the money are down 90% plus. Seems like a perfect time for hedgies to quietly buy them up and then pour in for the next two. So this is the thing, like there are hedge funds against hedge funds, right? We know that. It's a competition in the end. And people that understand the algorithm and understand what's happening, yeah, they're able to play against the game. And if they're short, if they're long AMC or short or whatever, they're able to play against the algorithm to know what's happening. But we have to think about these larger institutions. They're the market makers. They're the ones that write out these options. So remember, when you write out these options, your main goal is to collect this premium. This premium is the purpose of writing out these contracts, selling out these contracts. So if you're going to sell out and write out these $145 contracts, then you want to sell it at the highest premium possible. So how can you benefit off of this? You benefit off of this when volatility goes up. Because when volatility goes up, the price of the premium, the demand for this specific option increases in price. So sometimes you will see it's crazy how this is why you can lose a lot of money with options, but you can also make a lot of money. You have, let's say, we come close to January 21st, right, which is this crazy big quadruple witching date where there's a lot of money, options out of the money. And let's say that it's the day before, it's the 20th, and these 145s are trading for a penny. Maybe the 70s are trading for a penny, or I don't know, the 50s are trading for a penny because no one thinks it's going to go up to that price. Well, a lot of people bought these for like $5 back here, or they bought them for like $5 back here. Just think about how much it devalued over time and how much they were able to keep this, what was the original premium at $5 per contract, and now it's worthless. It's worth a penny. So they just made all that premium to hedge their position. Remember, because they're short AMC, they have to hedge their position along the way. The only way they're going to do that and minimize the losses for example, right here, they were trying to minimize the losses for the $40 contracts that they sold. Prime example of why they kept it around that price. But if you think about it, everybody that bought the $40 contracts back here, I mean, they made a lot of money because they were not able to drop this down to $40 by June 18th. Okay, it stayed around 63, 62. But once they have, so once they're able to create these way out of the money options and sell them at high premiums, well, they're hedging for that. They're hedging for the $40 contracts that they got screwed over with. Let's see. Yeah, there's definitely things that they don't have control of, and remember, that all comes down to the projector. After that, they really don't have that control because there's margin requirements that they have to meet, and this is why I think it's a ripple effect, because once they cross that threshold and they can't handle this volume coming in, well, they're screwed. Then they have to set up for that. They have to find a way to help themselves in the end, and that is going to be through the option chain. When they want this to run now before people get... So yeah, see, this is another thing, guys, that I think is just I specifically think is like a reverse psychology thing. when they say that they don't want this to run, before their income tax and stuff like that, and for people to benefit off of that, I don't think that they're thinking we can benefit off of the tax that's going to happen here, because that's, I mean, AMC is, yes, it's an overly shorted stock and there's a lot of money in it, and but the ultimate goal here is not to have this squeeze and then have have to pay the government money for tax purposes, because that's just not what's happening. That's not what people are thinking. Like, oh, let's just make the squeeze by this date and then tax everybody on that. I just don't think, I personally don't think that's what they're doing. I think that's just a way to, again, play this reverse psychology game and have people buy these options or or go in at a specific time for them to short the price even more, and then just keep on, doing this whole premium thing, this whole premium game, keeping your premiums. So, not financial advice, guys. Um, I've been there. I've been there. I've done that. I've lost money on AMC. I remember when I first started watching this and just kind of getting a groove of things. I went in on AMC when it opened on the 27th. That was one of the worst things that happened to me, because I was like, dude, I was so hyped for this. I literally bought AMC at $21, and I was butthurt. I've learned a lot, obviously, from then, because like I said, I've been watching this entire chart for literally a whole year. But it happens, okay? Because this is new. This is something new. It really hasn't happened in the past. It happened like once in the past with Volkswagen, but even then, that wasn't really pushed to the extent that AMC is pushed now. So we have to think about the stock market as a personality, almost like a person's personality, but it's constantly changing, and that's the way the stock market works. It's, you have to adjust to this person, this, I don't know, you can call it a person with like multiple personalities or something, that is constantly changing over time with the generations that come with it, or the technology that comes with it is constantly evolving. Um, does my projection fractal have certain rules they must meet? Because the two projector patterns you pointed out look very similar to what we have on December 21st. Um, so the whole thing with this projector is that it doesn't necessarily have to play out specifically anywhere in this cycle. Okay, here we have it in the beginning of the cycle, right? Here we have it towards the end of the cycle. It doesn't have to play, it could play out. It could play out in the middle if it really wanted to. But you have to think of options when it comes to these projectors, because they have to align in a way where once the volume comes in and the machine knows it can't take this anymore, it'll create either a bigger version of this projector or a smaller version of this projector. Back here in on these dates, these are smaller versions of the projector. Especially here on November, it's a smaller version of that projector because, well, volume has to do with it as well, right? There's a lot more there's a lot more risk involved with something back here, because, well, we're at that point where, with the amount of short interest there is and all these findings that we're noticing, and all this being pushed to the media and stuff, it's in a more vulnerable state for something chaotic to happen versus something back here or something here in January. Am I familiar with OBV? Yes, I am familiar with it. I don't. OBV values don't matter specifically. Like if you look at it and it's extremely high, it doesn't matter. It's the direction at which it's pointing at that matters because it creates divergence. So if you look at it from like a falling wedge and you have a divergence because the volume is crunching in so much, that's when it matters. So rating the OBV is only important when you look at the direction of it. Thank you for yeah, thank you, man. Lots. Appreciate that. Uh, are we following the patterns? Yes, we are following the patterns. Here, I'll pull it up again. Let's go to the 30-minute. So this is the current pattern that we're tracking. So we're going to take this. Mm-hmm. 3 a.m., line it up. Okay, see? Down, side, up, side, down, up, down. Look at this. When I say to a T, brother, look at this. Look at that. It's just beautiful. It is beautiful. Like I read the charts in this way, guys. This is just how I do it. I don't do Wyckoff. I don't do that stuff. That's more specific. It's more trying to read basically the intraday charts and stuff like that to predict these like movements and stuff. I'm not saying it doesn't go together. I just think there's definitely a misunderstanding in the community as how in the way that we understand what Wyckoff is with cycles. I think they're the same thing. It's just the one way to I mean, honestly, you're just separating the two almost because they go hand in hand with each other. It's just how you look at it. It's just how you look at it. There's no rules with how anybody can look at a chart. It's just somebody came up with a specific way to look at a chart and they called it the Wyckoff method. And that's fine. You can do that. But I like to look at it in this way. I'm not following any specific rules or technical analysis that comes with that. This is mathematically put in place in the way that I found these patterns, and it's working for me. So I'm going to continue to use this until it fails. But, I mean, this is currently tracking literally identical. Lou versus Wall Street thinks we're gonna get violent moves unrelated to TA. I like. I don't like to. I don't like to cause any like. I'm not trying to have any conflicts or anything with anybody. So I'm not really. I don't really want to. I like comment, I guess, on something like that. I just want to say that you're entitled to your opinion and you can say whatever you want with what you believe, and that's fine. The thing is, you have to be careful because as a retail trader in the past, I was very, very skeptical with how after this happened here in January, I was very skeptical with the market because I felt like I was failed. I felt like this wasn't fair. It took the buy button away. It felt terrible. And that's sort of this whole movement. We're kind of fighting against this system that is corrupt in that sense. So I don't want to just tell people, hey, we're going to squeeze this day because that will. Some people take things with a grain of salt, but most people don't. Most people like to rely on people's technical analysis and people's predictions, and sometimes that can hurt, okay? Because it's really easy to believe something if it just looks right. If it looks right and somebody else agrees with you, it's really easy to just believe that. And I just don't want to be that person, man. My whole channel, the whole thing with my channel is that I'm trying to make you understand the possibilities, the multiple scenarios and how they can work. So give you multiple scenarios to look at and understand, and then make your own judgment based off of that. Okay? So not just give you one scenario, one prediction. I just want you to be able to come up and read what it is that I'm providing for you, and then you do whatever you want with that, right? But I don't want to give a specific day. I don't want to give one prediction and then be done with that, because, well, it's just wrong. It's super wrong. Let's see. NWO. I appreciate that, man. Love the making the music for sure. It's very, very fun when it comes to stocks. Joined a bit late. Will the stream be available? Yes, it should be. I'm probably gonna keep it posted. Does that mean more downside tomorrow? I don't know. Right now, guys, like we are definitely coming down, and it's part of it's literally part of the cycle here, part of what's happening. Remember, these moves can happen in drastic ratios as well. But as you can see right now, I mean, look at this. Look at this. We're following the same structure. So what could happen is we can come down, and I had said this the week prior, when I said we were going to come up with this wedge, right? This wedge pattern. I said that we were going to hit the $25 level, $25.50, because once you do that, if you look at it from a Fibonacci retracement, on a Fibonacci retracement tool, you're probably going to want to hit the this green right here and bounce off. So that's going to be around that 25.50. Once it does that, it would create what is this narrowing flag, which is this wedge. Now we can possibly go a little bit lower as well. Okay. Now this all has to do with the specific cycle that we're following. So we have to keep an eye on this. We have to keep an eye out on what's going to happen. But for now, I'm going to keep tracking this, like I said, guys, until it fails me, and then I'm going to resort to something else. But right now, it hasn't done that. Once it breaks these cycles that have been happening, you can track them starting July 15th, okay? But once these start to perform a different structure in the patterns and the way they're behaving, then I'm going to get very skeptical, and then obviously run my my pattern scanning machines again to analyze the whole chart again, and then create something else. But right now, that is not the case. That's not what's happening. So I'm gonna keep looking at this cycle for sure. Let's see. More chart songs, definitely. I have one coming out hopefully tomorrow. It's going to be called Pink Pattern, so stay updated for that. Stay tuned for that, the Pink Pattern, guys. Let's see. So assuming we're on track 1-1 ratio, what's the date to watch for now for the 21st? No. So if you were, I did talk about this on a little bit ago, like 25 minutes ago, about the 21st of January. Thank you, Kevin. Appreciate you, man. Where are we on the graph before the spike up, in my opinion? What spike up? What do you mean, man? Let's take away all this stuff. Let's see. I mean, JJ, I know you were asking, bro. I know you were asking on my videos. You were like, dude, why don't you guess? Like, what? That's the thing. If I do that, if I just start guessing every single day, no one can predict the market like that. Remember that all that does is it creates unnecessary conflict in the community. If you're gonna just keep guessing and then retail, you're responsible for people's money because you may think that just by telling people that this is not financial advice, that they're not going to listen to you. They're gonna listen to you, man. That's the problem. I'm not trying to do that. That's what I'm trying to avoid. So that's exactly why I give multiple scenarios. Typically I give three. I am gonna come out with soon. I'm gonna come out with some sort of like series on my basically a simulation on what the squeeze would look like, but it's not going to be one. It's going to be like 3 or 4. No, that's definitely not true. If I can definitely provide technical analysis, I don't have to predict the price movement, man. Definitely don't have to. Definitely don't have to do that. Sorry about that, Romero. Here, let me just delete some of this stuff then for you. I got you, man. Let's get away. Let's get the cycle out of the way. Let's get everything out of the way. They're not worried about the price, people. Pip Ray, I appreciate you, man. Kibra, thank you for that, and thank you for joining. Where are we in terms of January spike up? In terms of the January spike up, we're in what is this? So I have a video called Breaking Flags. I highly recommend you go check that out. It's basically talking about how we played this entire fractal in inverse form. So if we place this back here, we have what is a puzzle, literally a puzzle. And the important thing here to note is this specific pattern right here. It's just inverse to that. And like I said, this is really nothing new. This has been going on, but it doesn't predict price. And this is why I push this. I push this a lot because it's true. If we invert this pattern right here, we start to see what is, right? We start to see what is this downward moving right here. And a lot of people were asking, well, are we going to squeeze downwards? No, we're not going to squeeze downwards, but we're also not going to squeeze upwards right here. Why? Because this specific pattern was that on the Breaking Flags video, and how I was talking about comparing the manipulation and how it works within each cycle. So here, what we have is we have a cycle back here. We have a cycle right here. They have their individual roles, and every specific session that is happening and is constantly being improvised, how I had said, will change according to the volume coming in. So the fact that this was flipped right here was specifically because of this projector pattern. Okay, so it will obviously take the inverse version of what's happening because it aligns with the cycle. The cycle, the way the cycle is timed. Because if they're able to short it right here, then they're accounting for the options that are coming up. They're accounting for those dates. This is strategically shorted in that way, and that's why the cycle works. Is because if you don't short it at specific times, then they won't align with these option expiration dates. Everything here, the cycle, the way it's structured is literally, it's a reflection of what the option expiration dates are. It's where they line up. That's how I was able to find out these 2-month marks. I used option expiration dates, I used pattern recognition tools, all of this stuff. Chris, thank you, man. I appreciate that. I will. That's super sweet. I will have a longer version of Blue Pattern coming out as well. Hopefully, at some point when I do release this full album, I'll have it out on Spotify so you guys can listen to that. Get a little nostalgic on these price movements. But yeah, longer version of Blue Pattern is coming out, as well as hopefully tomorrow, having this Pink Pattern song out. I like to make maybe like 2 songs a week, if I'm able to do so. What musical patterns were used to align different funds in playing out their algo patterns in concert? Well, dang. That's interesting. Interesting way to look at these patterns, algo patterns. What platform do I use? This is TradingView. So I use TradingView I think it's the best in the amount of tools that you're given, the amount of indicators that you can use. I think it provides a lot. So that's just what I like to use. And you're also able to use Pine to make your own indicators. So that's pretty cool. There's a lot of ways that you can look at this chart from a different perspective with the indicators that come with TradingView. So that's pretty cool. But yeah. So I know that obviously the market just ended, and we did drop to that 2642. Typically, guys, when the market ends, okay, and we are tracking downward momentum, the next day will likely follow, okay, and that is just statistically true. I'm not trying to be a bear or anything, but I had said that we were going to follow what possibly would be this wedge, okay? And if that is the case, then I would not be surprised. I would not be surprised if we hit the 5550, or I'm sorry, the 2550, and then bounce back and just trade sideways for a little bit until we bounce up again. It just seems like we're in that case. I don't see us going down anymore. Apart from that, if that does happen, and it does track the cycle like that, I'll give you that scenario just so you guys can see what's happening. But let's see where we are here. Right here. Okay. So if we were to track this pattern in identical form, meaning that tomorrow we start following this pattern like this in identical form, right? This is what would happen. It would be something like this. Now, from a technical perspective, if you look at this on the 2-hour chart, that looks disgusting, okay? That does not look pretty. The technicals, in my opinion, would not line up to be that way. Now, remember, these patterns play out inverse as well, so it could track this and create what is a George W., as freaking Trey likes to say. So if it tracked inverse right here, If it started to track inverse, then we would have something like this happen. Even then, this looks gross. I just from a technical perspective, guys, I don't see this happening. Now, something that could happen, and this is just a really, really like bear case right here. Like if this happens, like I don't even know what the hell they're doing with AMC. Like this is just nasty. But if we were to get something like this and somehow created these back to back, like this was a dead cat or whatever, and created these like back to back movements to the downside, and come down all the way down here to the, I don't know, $16 level, and then bounce back. I don't know, dude. That would be just crazy. AMC would start to look very bad, in my opinion. I don't see this happening. So don't hold me accountable to any of this. This is just me giving you a really, really like extreme bear scenario here. Now, if we track this, so let's go ahead and build this just so you guys understand maybe my stance here for the week. Let's go ahead and structure this in a way where we can build this pattern that's being replicated, and we'll go ahead and do that. So we're currently sitting right here. So we're going to take this. We're going to take it day by day, okay? So we're going to do June 1st. We're going to do 2 days here. That's 1 day. We're going to do something back here. We're going to do 2 days. And we're going to keep tracking this. We're going to do 2 days all the way through. And this is a good way to understand how these movements can happen, right? Every single day. We'll do two. We'll split them up here. Right there. Okay. 1. All right. Sorry, guys. This is the best way we can do this right now. Just wish TradingView was just a little bit better with being able to replicate these patterns, cut them up and stuff. Like that'd be nice, but I think they're probably working on that. All right, what did I do here? 1 there. There's 1 here. There's 1 here. And there's 1 here. Okay, yeah. Let's stretch these out. What did I do? Oh, one of these didn't get... Okay, I didn't get this one correctly. There it is. Oh, yeah, and this is the red pattern, by the way. Did I do it wrong again? Okay, sorry about that, y'all. Okay, there we go. So let's build the rest of the week, see what can happen. Okay, so if we started to trade, I'm going to do the bullish case first, okay? If we started to trade inverse to what this pattern is tracking right now, this is what we would get. We line it up here, and we're going to do this in a way that makes sense technically. On a technical perspective, we're going to do it in a way that makes sense. There's 1. Mirror that. Here. We're building the best case scenario right now. And then we're going to build the worst case scenario too. So this is where I get to my point here, where these patterns start to play out inverse, right? What happens here, right? We had a short attack, and then we had upward pressure. This upward pressure was probably due to a favorable technical level where retail went in and they were able to probably go in on this too, and because they're able to also cover and save themselves there. So when you cover a little bit, you're able to minimize what would have been these shares that you're trying to short, right? So later in the cycle, you can actually short when these patterns look, when they go to the upside and they went ahead and covered. They're actually able to short then. So what would happen here, in my opinion, is that we would actually trade inverse at this point. And why do I think that? Well, because we would have to hit some sort of support, right? We can't just go up all the way. Actually, this is way too high. Now, this chart obviously doesn't look appealing to me. I don't believe that the technicals look right here, but this is just bullish, best case scenario. I'm going to put this for people that are just coming in here. Extreme bullish case. Very, very, very transparent, guys. Okay. So this right here that we have going on, very low volume, very just, I mean, you can tell here that this was probably traded heavily on dark pools. So here we would probably see some sort of covering, some crazy covering. And the reason I say this is because we're nearing the middle of the month, which is when we see these drastic moves happen. So if that was the case, you know, then I don't know if we would see this pattern playing out in this way. It would probably be, this would probably be sideways trading, honestly, because it is the end of the month. And you see it happen right here. It's very, very small, but it is flipped. It is inverse. And you see it happen back here as well. But right here, it's a mix of both. But here we have downward pressure, and then here we have that upward pressure. So it really depends, but sometimes within this cycle, there are specific sections that aren't really important, and I would say that this depending on where you are in the cycle, right? But here, I would say that it would be important just because we are nearing that time of the month, right? So let's just take away this for a minute and do the neutral case, because neutral chart, and this is with neutral charts. With neutral charts, I will do. It could be a bullish case. It could be a bearish case. It doesn't matter. It's just what I believe with the current technicals. But see how if I'm able to give you a bullish, a bearish, and a bullish chart, then you have more room to see the possibilities that can happen. Let's see. Shouldn't the price bounce if they are covering? If they are covering, yes, the price should bounce because they're covering those shares. So you can see that back here when they shorted this, you see the upward pressure here. Yeah, that's them covering. And then here as well, you can see it on within the cycle as well. If you look at right here, this is them shorting, and then this is them covering. And when they cover, they also have to be careful because they will, like I said, they will cover according to these option expiration dates. They will make this projector on purpose too, because when you come in with this volume and you're covering these shares, it's with the help of retail, but they're also screwing themselves over. And this is where I talk about the opportunity, the risk that comes with the opportunity, right? Because when they short the stock, yeah, there is an opportunity to prolong the cycle, but there's also risk involved because once the technicals line up and they have to cover these shares at these specific times and retail comes in, well, that's where the algorithm can tell you, okay, dude, there's way too much volume coming in. Like you're going to have to set up for what is this next run up. And, but yeah, you will see this pattern playing out again. So this is why I think this week is very important, because if it plays identical, then we're actually not going to be tracking what happened in the last 2 months, because the last 2 months the last two cycles, it played out inverse. So here If it plays out identical, then that'll give us more information, because now we know, okay, well, now it's tracking it identical. So what's going on here? And if that was the case, well, back to the neutral chart. Let's take this guy and flip him over, because that's what it was. It was neutral. So see, I'm taking this pattern from here, right? Same pattern, okay? And we're going to line it up. 3 to 3 is what it was. It's what it's supposed to be. 3 to 3. There it is. So this is the neutral case, guys, okay? If we are able to repeat this pattern here, which is very likely just because we closed red. We closed red. So every time we close red and there's downward pressure from the beginning, we typically get downside pressure. So this is probably what's going to happen. We're going to get some sort of wedge that I've been pushing out here. And this wedge is likely to play out just because, and it's likely to play out with mix of patterns happening. So if this is going to play out inverse or identical in the beginning of the week here on Tuesday, then we might get some sort of identical form as well to create this, right? Because within these patterns, we're constantly taking opportunities, but we're also covering at the same time. And this is speaking from a hedge fund's perspective. They have 400K FTDs based on December 14th and over 100K in options. What do you think this will do? I think that here's a prime example. So this was kind of relating to your point here, but we can definitely look at the past when it comes to situations where they do have to cover according to these like failure to delivers and these options and stuff, depending on how many are in the money and how many they have to hedge for and stuff. But obviously early on here we have the March 19th, which was another quadruple witching date, which was very important. And what happened here was that, well, we actually ended up going up because they did have a lot of pressure happening, but they were able to bring this up here to the $15 level. And then after these options expired, they were able to short it down afterwards. So sometimes you do get a similar case happen like this. Now, how long did this take? Well, let's compare. This is March 19th. And let's go back to, let's do a month. So it's like exact here. Let's do a month. 3 to 3. So if this was like a similar case, see how all these movements are happening? This is them trying to keep the price down, but they can't. Now, this aligns with that date, that option expiration date. That's important. If we align this up to the January 2021, we're not seeing that happen. We're not seeing that happen in that specific case, right? We do see some covering right here, and then they brought the price down. Now, if that was likely to happen and they were able to remember, the ratios here are completely different, because down there, we're talking $15. So if you take that ratio and spread it out, it's a lot different. These moves are more drastic because there's more covering that has to be done with, larger price action. So we would have to see some crazy moves. So here we could maybe finish this like W and then come back up here to the 33, back down, and then all the way back up to 40, and then bring this to like $40 by January 2021, which is likely. It's possible. I'm not saying it's not possible. That's definitely a possibility. But that's why I keep saying this. We have to wait. We have to wait for the coming days. This week is very important. And Mondays are boring. So as you can see, guys, like they took us down today, 2%, 2.5%. It's boring. Let's wait. Let's wait for Wednesday and see what happens. And if we continue to track this cycle, depending on the way it's structured, then we can make a better judgment on what's going to happen. But right now, this seems to be the case. We bring this back down here. It almost like fits perfectly, honestly. Like even this pattern playing out identical is like screaming a wedge pattern. It's like literally screaming a wedge pattern. Look at that. It's like boom, boom, boom. Boom, 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 boom. So this is what it's looking like. Let's see. Questions. Help price. DOI see us going down to 18. I personally don't see us going back down to 18. I did lay out that chart, and I don't think it looks pretty. So I don't think we're going to go down to 18, but anything is possible. If we were going to go down to 18, I think they would do it according to the cycle. So if we are going to go down to 18, it has to be soon, because right now we're obviously not in bullish territory. We're in bearish territory. So if they were going to do that, they would do it literally this week. They would have to. Or they could do it this week, or they can do it on Monday next week. I would say that's when it makes the most sense to bring us down to 18. Do I think we're in the January fractal? So I did go on Rico's live a couple of weeks. What was it, like last week, I believe? And we did talk about these fractals back here, and they are a good way to see sort of the manipulation happening, a good way to go back and understand the manipulation happening. But sorry, I had to drink some water. My throat's getting really dry. So the thing with this, guys, is remember, I really, really recommend, guys, I keep saying this, but go watch the video that I posted yesterday, because I basically talk about how these cycles are shifting, right? When we look at these patterns and these fractals that are repeating, they're not going to repeat. These macro level fractals, these right here, because these smaller fractals that I'm finding, these patterns, they're, like I said, they're put in place for the options. But these larger fractals that predict these large price movements on specific days, sure, they can look like I told Rico. I was like, dude, like, look at that, man. That looks literally perfect. This thing literally even lines up with the projector here, and then the run up, right? You can stretch these out, and yeah, a lot of the times they do look identical to what's happening, but sometimes they don't. Sometimes they play out inverse. Remember, I talked about it in the video. I was like, dude, I was fooled because I was tracking this the whole time, and I was like, you know what? We're playing this whole like inverse game here. Like we're definitely gonna squeeze now, because this whole thing is a puzzle, and we're tracking inverse to that, right? And we're gonna squeeze. But no, like we ended up, instead of going up and from this projector, they ended up shorting us. So that's just a prime example of like when we look at these macro level fractals or patterns, that it's harder to predict what the actual price movement is going to be. And that's why the technicals are important and the volume is important. Do I see? What's up, guys? Oh yeah, man. I know. I'm sorry about that. I'm sorry that you know, sometimes, yeah, we get carried away with these specific just setups, man. Sometimes we're fooled by the setup, and that's fine. You know, we learn from that. That's the best thing about failure, is that you always come back, you know. it's like super cliche to say something like that, but it's true because once you get beat up so hard, you almost become like you become a very tough trader in the sense that you're able to be patient, you're able to hold yourself back from trades like that and kind of understand things from another perspective and know that hey, we're gonna be fine. Let's see. Quarter four is going to be in March. 40 before I'm not I don't want to answer that. Like I gave you that scenario about the $40 possibility if we were to follow some sort of similar structure to what happened for the quadruple witching date on March 19th of 2021. So if we do follow that similar structure now, literally yesterday, then the possibility of hitting $40 is likely. Also because they will remember play against some hedge funds sometimes and make them think that we're going down and also take their premiums. Okay, because these larger institutions are the ones that are controlling or manipulating. I'm not going to say controlling because they can't fully control it, but they're manipulating the price action. So that would be the only way that we would reach $40, and it would make sense for them to hedge their positions and keep it at 40. Is if we started to go up very very soon. How long have I been charting for? I've been charting for about 2 years. Um, just kind of looking at things, but I really started to get into it when this whole thing this whole thing came down. For me, my whole thing has been music forever. That's literally all I do. If I wasn't charting, guys, it would be music. And that's why I love to like incorporate the two together. Gives a good representation and easy way to sort of uh, understand things, right? You know? Yeah, man, for sure. Anytime. You guys can, bro, this is trading with emotions, okay? We can get all personal and stuff. You can tell me anything and I'll be your little therapist. No, I'm just kidding. But we can we can chat it out, man. Make each other feel good. Cause yeah, sometimes we need that like reassurance, man. Like I learned the hard way too, man. I lost a lot of money in the beginning and it felt really crappy. But like I said, you learn from that, and I think it's really important to learn from that because just think about it. You start off early, you lose a lot of money, but what if you hadn't done that and you lose a lot more money in the future? Like you lose a lot more money when you're in the millions and stuff. Like that would just be terrible. Learning the hard way then, no, I'm good. I'll lose a lot of money now, understand the system and be a little bit better at trading than lose the money in the future. So I'm telling you, man. Dragon in, thank you. I appreciate you. I'm telling you, man. If you look at the time frame starting at 12:14, that was when they lost control. The computer started shorting out of control when the Jan Feb came. They doubled down and truly lost control. 12, 20, 12:20, 12:14, 2020. Oh, back here. Um, so yeah, I believe that this whole thing started. I mean, if you look at the volume, so here I'll pull it up here. But if we go back to what was the November run up, in my opinion, this is what started everything. Okay, because just the fractals align with everything in the patterns. This was like their finishing shorting phase until everything just went downhill. If we look at the volume here, Yeah, I know you like my volume is goofy too and everything. But if we look at the volume, that's obviously the one of the best indicators you can look at, right? Is basically what comes up with this price action that's happening, the volume. That's when you start to see the heavy volume come in. This is where they were basically screwed because at this point they tried so hard to short it with everything they could. And then this is where they lost control, right? Cuz you can short this, sure, and believe that you're going to get it down to whatever price you're looking for. But the projector was what signaled that for them, okay? So you come back down here and yeah, this they prolonged this for how long? So it was about a month and a half or 2 months that they prolonged this because November 10th, November 9th, it went up, they shorted it, they tried to keep it back down, and then yeah, they lost a little bit of momentum, but at this time, GameStop was going up, okay? And since they were both tracking each other at the time because they were short on both companies, obviously people also jumped in on AMC because they saw that it was also very high in short interest. Um, but yes, it hit what was this projector right here. And this projector said, "Hey, I don't have enough margin to keep you guys I don't have enough margin to hold you guys anymore." So this is where they start to plan out these options and set them up for these specific dates and then bring the price down, right? They reach that level where they're comfortable shorting and keep the price down. And this is the downfall of the small hedge funds, not the big hedge funds, the small hedge funds. A prime example of this, guys, was when Citadel was able to basically bail out Melvin Capital, right? They're not as big as Citadel, but they were able to help them out because they were the ones that got screwed over. Okay, let's see. I'm trying to go over like all these questions. I'm trying to like not to miss one. Let's see. Yeah, but if I finish, I had 3K and I put 2 in AMC. Okay. How do I feel about those July 145s? So, okay, so the July 145s. So I personally, guys, look. Typically, the obviously the longer you are out of the with these like options, right? I would not like, and guys, this is not financial advice. Again, I'm going to keep repeating this because it's not my duty or anything to be giving out these any sort of advice at all. This is just my opinion and what I think. But with options, you know, you have to kind of go in at it with uh, with a mentality that you're going to keep those, right? That you're going to hold those because if you're looking to make obviously quick money, then you wouldn't want to just buy these and then sell them at a lower price. But the July 15th are very far, obviously, with the date, so it is a safer bet. But you can also benefit from just holding off the or one. I'm gonna say one can benefit off of holding off for technicals to just look a little bit better, so that you don't lose a lot of money, or if somebody doesn't lose a lot of money if this were to go down, a little bit more. I just right now we are in a very uncertain spot that I would like to just hold off myself until things just look a little bit more appealing. Because right now they just don't. This looks very, very boring to me. Until I start to see this cross the $35 level or $37 level and gain support around here at the 33, then I would start considering, those further out of the money contracts, the 145s and stuff like that. But I mean, closer in the money contracts are definitely more appealing to me right now. Derek, thank you, man. You've bit this guy, Derek, man. He's been here since day one. I remember like I don't know, I had like 20 subscribers, and this guy was like commenting every single day and like get just pumping it up, man. So I appreciate you, dude. Thank you. Joanna, what will make the volume go up? So the volume coming up has a lot to do with the cycle that's happening, but also has to do a lot with the setup, right? So remember with this projector, the setup was there, right? Because we had 4 different flags, and when we finally crossed this flag that we were in, right, we were able to hit these levels that just looked right. It looked right. Everybody was hyped. There was a lot of meme traders coming in too, which is very important with the price action. So this is where the algorithm said, nope, we can't handle this volume anymore. So everybody went in on this, creating this pressure all the way to 77. So the volume has a lot to do with the price action. Lou says a squeeze doesn't take more than a year. Regardless of your opinion on Lou, what is your thought on that time frame? The squeeze doesn't take more than a year. So I according to what dates though, because we obviously things started back in November. So if we say that, then it's already been a year since the beginning of all of this. So just I guess rephrase your question on that, and I'll get back to you. Oh God, let's see. I'm getting lost in these real quick. I'm gonna try and answer them. Volume across market was down today. No worries. Yeah, it was down. It did start kind of following this. What? Well, the thing is, remember, sometimes it does play inverse to what the SPY is doing, and the SPY ended up trading sideways today, so it wasn't really crazy. But remember, AMC is most of the time going to follow its own cycle, because it is one of the manipulated stocks that does that. So I, that Phrygian guy, can they keep this pinned down? Uh, AMC is probably the most popular stock just in the market in general. So that's where we have to think. Is this other is X? Can you compare that to something like AMC? We can't compare other stocks to AMC because of the way it's manipulated. The amount of shorts that got themselves into this play, they're scared. They're obviously scared because there is a lot of retail that is willing to hold, first of all, the shares that they have bought, and there's a lot of retail that's willing to come in when the time is right. So that obviously has scared the shorts scared, because, well, if there's that much, if there is that much amount of volume coming in, well, then obviously, like, you want to cover your positions. You want to get it at the least amount of the best price for it. Okay, I'm gonna start to come down a little bit here. Sorry guys, if I don't answer your questions, just keep asking. If no one plays options, would it be beneficial? The problem with that, man, is that that won't happen. Even if everybody pushed the idea that you know, guys, stop buying options, this and that, it's not gonna change. It's remember, this is a movement that it doesn't matter what people say. People have their own convictions, and they will live to those. They will live to whatever they believe, whether the media says it or whether the community says it. So that won't change the outcome. And that's the thing with AMC. It's like if you tell people to stop buying options, you can push that idea out there, and some people are going to follow that, but not the majority of people, because options is where most of the money is in. Have we hit the projector yet? No, we have not hit the projector yet. We hit the projector back here in November, and remember that was the test run, and they shorted us, so we failed that. Maybe at some point I'll post like a chart where these projectors are, and I'll just let you know if they failed or not. Maybe that'll give a better representation of where these patterns are found. And I did say this earlier. I'm going to post a song tomorrow called Pink Pattern, and that is going to be the projector pattern. So stay tuned for that. Two. How come we believe they won't be able to do this indefinitely? Well, see, that's where you have to make your own judgment on how how strong the community is and how strong you believe the community is. I believe the community is strong because of how much people are pushing this on Twitter, on Reddit, on Weeble, like comments and stuff like that. Like I see that people are very passionate about this. I see that people are passionate about change, about the corruption that's happening in the system. And all of this has to do with people being loyal to the stock and being loyal to their convictions. So that's why I just believe that this movement isn't over. Like this is going to keep going, in my opinion. Next level of lifestyles. I highly recommend just I typically like to crunch everything up into like songs. So go listen to the songs, and everything should be there for you, man. Uh, if you want to just kind of catch up. You will, this guy, my little. If you want to see my face, follow me on Instagram. I should have like a picture of myself on there. It's on my link. And I also linked my Spotify. So I do have a separate Spotify account for like my personal Spotify. So I have stuff on there. I don't post my face or anything just because I want you guys to be able to actually look at the chart as much as possible. And the way I edit my videos, it just doesn't make sense, honestly, to put my face on there. I'm trying to make more like an infographic type of video when I do these, so I spend a lot of time on the graphics and not specifically on putting my face on there. Let's see. Where am I? Okay. So Tesla can go from $40 to 1,200 even when Elon sells billions of shares, but AMC can't even break 100. It's just a different stock, man. And then there's a lot more. Um, there's a lot more. Right, Tesla is just a different game. It's not the same at all. Remember, fundamentally speaking, obviously, like AMC was got the amount of hype it has now, and yeah, we're able to use this as a good way to keep the price where it's at now, because yeah, there's a lot they've been selling out on box office sales and stuff like that, so that's great. But just fundamentally speaking, they're completely different charts. Yeah, it's definitely nice not having Shillys in here for sure. Stefan. Steven. Is it Steven or Stefan? I don't know. I think using log is much better with AMC. Yeah, the cycle here that I have repeating is it's a log version of obviously this run up back here. So I like to use that because it's a better way to track these patterns instead of, if we were looking at it from just that one ratio, obviously this pattern is humongous, right? Compared to these tiny patterns back here. So if you put it in log form, you're still able to see the same ratio go down. Just it's as long as the ratio is the same. That's the only important part. Not trying to be negative, but there are not many indicators to the opposite. What do you mean by that? Oh, you're okay. Never mind. You're talking to somebody else. Thank you. Yep. Let's see. How many algos are manipulating AMC stock? That is the that is a question that no one's going to be able to answer. These big institutions are doing whatever they're doing behind the doors, and they're able to either use these algorithms with each other, communicate with each other, and code whatever it is. Man, that is not something we can answer. But what I do know is that I can see what's happening with the charts and make my own assumption. Yes, Chris, I did this for you, man. I have sound now, yeah. I was telling the chat earlier that the reason you didn't have sound was because my mic was connected stereo instead of mono. So you were probably some systems can only pick up like a left or right signal from a stereo point, and your system might have been missing that. So that was probably the reason why. But now I connected it mono, so you should be able to hear me fine. Why can't all apes target Max Payne to force the MOS? We beat Max Payne 3 weeks in a row. I believe MOS will trigger. So Max Payne is, again, going back to this whole reverse psychology thing. At some point that this specific thing there that people are talking about, the hedge funds are going to catch up to that, and sometimes they use that to their advantage. So if people keep saying Max Payne, this, and that, at some point that's not going to go your way. And that's why it's very, very important to come up with different scenarios and different possibilities as to where the price could be, because this could happen at any given point. That's the thing that's very unfair, is that these hedge funds, we don't know what's happening behind the doors, and they know what's happening behind the doors, but they also have access to retail. They know what's happening on social media. They know what we're doing on these applications, on these broker applications, right? So they have way more information that we have. So that's their advantage. What they don't have the advantage for, though, is how retail is able to come in on these meme stocks and hold on these meme stocks because they want to, and they've been failing at making retail do that. How old am I? I am 24 years old. You're like, how are you? I'm like, yeah, I'm 24. I'm I would say probably still a little bit on the younger side, maybe. 24 is not super, it's like mid quarter life type of deal. Young Ape, yes. You can call me. Um, I mean, I feel like that's the range here. Stock market is very the stock market is very like on a geographic scale or demographic scale. The age group I think is the heaviest age group is going to be between 25 and 35, and then it goes all the way up to obviously to like the 65 range. And but there's barely, which is weird, but there's barely any like from 18 to like 20. Yeah, I guess you can put it on that mark from 18 to like 21. There's barely any people in the stock market, which is really weird. But not really weird because everybody's on crypto now. Thing is, I don't like crypto as much just because um, I like to do a lot of trading with options and stuff as well. So when I look at that, crypto doesn't really have uh, a broad system, I guess, yet with options. So I don't really like to mess with that. And then, yeah, I just I've been learning a lot more with just stocks in general. And right now, I like to focus on AMC. So that's literally all I watch, guys, every single day. I'm very, very loyal to it. Yes, I do. I have a marketing degree, bachelor's degree in marketing. Um, oh, Bartos, thank you, man. This mic is just it's a Sennheiser mic. It's I connected it to my interface. I have a Roland interface, and I record with it. I sing with this mic. I record with it. Sorry, bro, if I called you something else. Like if that's I mispronounced your name. I don't mind being in this thing, guys. Like I know I'm like I don't know what the demographic is currently. I know off of the analytics that I have on YouTube, that's what I have. That's the most of my viewers are gonna be on that range, the 25 to 35. I mean, I love it though. I love this. I would not want anything else. I would not want to be doing anything else at the moment. I think at some point I will branch out, but right as of right now, I want to just stay on AMC. Slay those hedge fund demons. Yeah, yeah, man. That's all. That's all this is about. I'm a baby. Yeah, I guess you can say that I am a baby because a 24-year-old baby. Where did I learn this? I just specifically I started learning this obviously when everything went down. I started watching. So I started watching Trey and Matt from the very beginning. Obviously, those were the guys that started this whole like AMC movement. Obviously, you have your roaring kitty who started the whole GameStop thing, but once that went down, I really got hooked on AMC because of the amount of short interest that it had and the just from a on a psychological perspective, the price was just more favorable. Obviously, like if you look at GameStop, it was like it had already gone over $100, and yeah, when people say like, "Oh, the price is doesn't matter," it doesn't matter because like you have to look at the market cap. But from a psychological perspective, somebody who's retail, somebody who's new to meme stocks, they're gonna look at a $5 price more appealing than something that's like $150 or $200. So that's why I stuck with AMC. And then yeah, after I after I did that, I was very curious on just how stocks how just the specific price of AMC, how it was moving, and I was just very intrigued by it, and I would do analysis on that for a little while, and then I started to watch Astro a lot too. Astro's the guy that kind of shed the light into like this whole cycle thing. Obviously, cycles have been around for decades. It's not anything new, but he shed the light to the cycle happening with AMC, that there was some sort of like cyclical movements happening. And I was just I was like very very interested in that, and I started to do my own research. I started to just chart every single day, analysis. I started to do different a lot of different analysis on the tools that I was using. My brother helped me create this basically this tool that was able to recognize patterns, these like similar patterns that were happening throughout the chart. And that's exactly how I found the green pattern, the blue pattern, the pink pattern, the red pattern. All these patterns were found with this pattern recognition tool using a time series scanner. Your wife has a marketing degree. Dude, it's weird. I used marketing as leverage for my music. I wanted to do music. I've always wanted to do music. And I thought, you know what? Like, I think me just going to school for marketing is going to help, at least in ways where, yeah, I can market myself in some way in the music industry, right? So I used music for that, for marketing for that. It just really helped. But I started to do, um, I started to do a lot of, what do you call it? I started to do a lot of stocks and stuff after that, and I got really really hooked into this whole thing. So now I'm doing both, right? You can do graphics, music, stocks, all that stuff. Yeah, the yeah, fake hype and stuff. I don't like to push that out. I'm not, like I mentioned earlier, this channel is not like clickbait or anything. I'm just like, if you want to watch my stuff, if you want to listen to some music and learn a little bit about what's going on behind the curtains here, well then, yeah, watch me. Right? But I'm not going to hype. I'm not going to hype AMC until we are at a comfortable level. And yeah, I'll go live and we'll have some fun. Yeah, like I'll definitely hype when we're on the squeeze. But that's the whole journey here, is trying to find that place, trying to be comfortable in that place. Okay, guys, it is 4 o'clock, so I am going to end the stream now. But it was fun. It was fun going live for the first time ever. I hope you guys enjoyed the stream, and I will see you guys at some point. Hopefully, looking to stream on Wednesday, so look out for that. I am going to be posting a video tomorrow on the pink pattern, so stay tuned for that. And yeah, thank you guys for watching. Love you guys. Peace out.